demand. This was 8 hours ago. Yeah, oil price rise. Let me show you. This oil price. So the oil price moved a bit higher. It came out 8 hours ago. That's obviously yesterday. Probably when the market, I think I don't know this time. This time should be PM. This CDT. It's not the particular time it was, but it came out probably before the market opens. They said the price edges higher in early Asian trading on Monday. Yeah, I said it. It was in the midnight of Asian market, lifting the optimism over a day trade framework between the United States and China that has eased fear of a prolonged trade war between the US, the world's two largest economics. So now this is a sample to tell you that potentially the trade war has eased a little bit between China and the United States, which was one of the reasons why the price came down. Now, as the Asian market opened, there was a sharp increase, and there's some confirmation that the market rose. But now, currently, we have a little bit drop down because it dropped down from 65 to 64. So this is like a retracement. It can be potentially hit 66 potentially, and which is 250 pips. Let's say we target 250 pips on Brent and 250 pips on WTI. Let me check the potential return. So let's say you're using let's say 20 lot. Yeah, 20 lot, which is $20, which is 2 lot. Which is 2 lot. Times that means 250 per 250. That's 500 rupees. We'll be expecting 500 rupees. That's gonna be a lot of money. That'll be $20 times 500. We're gonna check $20 times 500. So that'll be $10,000. So yeah, our estimated profit will be $10,000. Yeah. So it will give you $10,000 on both WTI and Brent. Yeah. So SL will be SL should be here. That's estimation of 100 pips. 100 pips. Estimation of 100 pips. So 100 plus 100, that will give you about $2,000 loss. So you will be expecting to have you can risk, or your risk can be like maybe $2,000 and your profit could be $10,000. Yeah, on this analysis, it's as simple as that. It's as simple as that. So it's not too hard. So we could use that analysis on it. Then gold is also the same thing. Gold, we're expecting a rise on gold. So gold will still rise at least to 200 pips. So if gold rise back to 200 pips, let's say you're using the same $20, we say $20 times 200. That'll be $4,000. So you're gonna make $4,000 on gold. You make $4,000 on gold. You make $4,000 on gold. Let me 20 times 200. So you're gonna make $4,000 on gold. Yeah, $4,000 on gold. We're expecting is it 250 pips is perfect possible on gold. So you're gonna make 20. Let's say you use $20, 20 times 250. So you make $5,000 profit on gold. $5,000. So you make $5,000 profit on gold. That's if you're using 22 lot, which is $20 volume to trade. You make $5,000 profit on gold. Yeah, so your risk can vary. I don't really like your risk can vary. You make $5,000 profit on gold using this volume. So is uh, the risk is below this support, which is 39. You can put 39. Yeah, you can put 3950, and which will give you. Let me check how many pips. About 50 pips. Yeah, 50 pips. So which will be give you around $500 to $1,000 losses, and you're gonna make $5,000. So because when you place a trade, especially on derivative, you need to put SL. So this is exactly what you're gonna make on forex, on gold, and what you're gonna also make on oil. The reason why some of us are not making money is that we are not really precise how much money we're gonna make in any particular trade. We try to use emotions rather than um, logic or sound analysis. So that is the reason why you're not making money. So if you trade this market, you're gonna potentially, and it worked the way we analyze it, you're gonna potentially make $15,000 this week. If all of them hit this week, you're gonna make $50,000. So those of you that may not have all the money to trade it, you have maybe like maybe $1 or one lot, you're gonna make $1,500. Yeah, if you have like maybe less than $1, you could make maybe $50. If you're, what I'm trying to say, that the volume of your order, the capital you have, can determine the number of returns you make. Yeah, and this is exactly what you should be doing as a trader, where you become precise in your analysis, know how much you want to gain, and know how much you are risking per trade. So it helps you to know if whether you are succeeding in trading or not. It's very, very important. It's very, very important. Yeah. I don't know the kind of screen I'm sharing with. Okay. Oh, obviously, I was sharing a different screen with you. So let me show you the screen of what I'm trying to explain. I don't know. I was not sharing the right screen with you. So this is the screen I was sharing with you guys. Look at it. So I was expecting what I told you here. I'm so sorry I didn't share the right screen. And you guys you guys not even comment to tell me, show me, hi, I'm not seeing your screen. You could have commented to tell me, I'm not seeing the screen, so it will help me. Yeah, somebody said, can I enter the USJPY? I cannot ask you to enter or not. Stop asking me those direct questions. I will make analysis for you, then you decide. I don't know the broker you're using. I don't know the exchange you're using. So I cannot decide for you what to do. I give you analysis, then you decide to use them or not. Because some of you may have a good analysis, but you may be trading with horrible brokers. I don't even know maybe whether you're doing option or something. Yeah. So I can't ask you to enter, buy and sell. I can't do that. It's against our ethics. We give you a proper analysis, proper risk measure, proper profit return. Then you cannot decide how to trade on it. Tony, I hope I've made that one clear to you. Esther, you're still connected to me. So, and I wanted to hear from you. I could not hear you. So now, what I was saying, let me repeat it again. I was saying how I was trying to explain to us how we achieve over 1,000 something pips. It was when the WTI was below $55 per barrel, and we analyzed. First analysis was that it's going to go to 60. Then when we saw that inventory report was good, then we analyzed again, it's going to go above 60. So we were able to achieve it. It was able to go about 650 pips, and we achieved about 620 pips last week. So then, and again, we had the same thing on Brent crude, the same analysis, because they go the same direction, and we were able to achieve 580 pips here on Brent. Then gold, the gold price, we spotted this particular support level, and we expected a retracement, and it retraced to from here to this point. but we were able to achieve 108 pips while you got to 127. So these are the things we did. Then so currently now there are some information we see. As you can see, the oil may have chances of going more up. If you go more up to at least maybe $64 per barrel, that is WTI, and this one could go to 66, that's the Brent crude. So we try to target maybe 25 pips on each of them. So we target 25 pips on WTI, 25 pips on Brent crude, which will give us so we target 250 pips on WTI and 250 pips on Brent, which will give us 500 pips. Yeah, I think I got this wrong. 500 pips. Yeah, 500 pips total. That's this week. So that means we're gonna, and if you're using like 22 lot size to trade, which is $20 volume, you can multiply $20 times 500, or which will give us $10,000. So that means I was right on the figure. I was only wrong on. So which will give us, let me put it on the green. Yeah, which will give us a profit of $10,000 both on WTI and on Brent. So let me delete this one. So this is no more valid. Let me correct this one too. This one, assuming you're using $20, which is equivalent to 2 lots, then you multiply $20 times 500 pips. Of course, it will give us the same $10,000. So this will be the profit expectation for this week. So if you are using like 2 lots, maybe $1, which is maybe 0.10, $1 volume, it will give you about $500 profit. If you are using maybe 0.2, like those micro lot size, you may have about $250 profit. $25 profit, $80 profit, but I just want to make it a standard. So, on this analysis, if everything works the way it works now, based on this current price, we're able to achieve 500 pips on oil and WTI and Brent, and with a $20 volume, which is 2 lot size, we are gonna make about $10,000 profit this week. They're using it. So our risk, we put the risk, which is the SL level, around 59, which is 59.50. That's the minimum. If you want to go to a bigger one, you can say maybe 58.50. So if you put 58.50 on both, the loss will be around $1,000 to $2,000 loss. So if you are expecting to gain 10,000, that is 1 ratio. That is 80/20. Yeah, that means you are gonna make $10,000 profit. And if analysis didn't work out on this one, you have a drawdown of $2,000 to $4,000, which is also okay. But I think I should encourage you to put on $2,000, like 20% maximum can be fine for you. One thing about our analysis is that we try to be precise in our analysis. We have to be precise both on the risk and the reward ratio. You have to know how much you're expected to gain and how much risk you are risking. That's what makes you a good trader instead of somebody that speculate. If you speculate, you won't even know how much you're gonna gain in anything. We did the same thing on gold. We're expecting gold. Gold, we've been buying more of gold and selling. So this point has given us a hope. So if gold is to rise at least back to 4,280, that would be average 300 pips, but we are targeting only 250. So if you use the same two lot size on gold, if you have good capital, then obviously you're gonna make $5,000 profit. And if you don't have up to a capital that can trade up to that, you can use maybe your own small capital. It can make maybe $250. You can make $25, $50. No, $25, $250. You can make 2,500. You can just make maybe depending on how much. Yeah, the volume, because the volume we put here. Just put this one as for like a standard purposes. I didn't just want to But I cannot be able to analyze each of the lot sizes on paper. But you know how much you are trading with, so you can be able to also um, calculate yours based on how much you are trading with. What matters most is the pip. That's what matters more. If you're able to get correct positive pips, it will help you in your trading. That's the most important thing that matters in trading. Pips matters more. So now, if your analysis is always correct, then if you can now scale your trading capital or trading career by looking for more capital to trade your pips and make good profit. Then on the side of Britain pound, we are buying it already, so it has not hit our stop loss. So probably we're going to have some retrace from some. It's going up already. It may go up as I speak. It may go up at least maybe this week to 63 to 100 pips. Yeah, which will give us about $1,000 profit on on a standard loss size of $10. On a standard loss size of 10, which give $10 per movement. Similar thing is applicable to Euro US. We bought it last week. Some position are still open. We have not closed them, so we're gonna also expect the same thing. But there's one thing about Euro USD I mentioned last time. Let me check it on weekly chart. Okay, there's one thing about uh I think we should leave Euro USD for now. It has not presented a good opportunity for us, to be honest. We should leave it for now to see what's going to happen. And we'll check the fundamentals to see what will be the outcome and the focus for the month. So you know that this week is the last week of the month. So many companies are going to do what we call balancing their sheet. So they'll balance their sheet because and that time the market may have a little bit of retracement. Does not mean that it will not continue going that direction the next week. Like next week now we'll have more. So this week, these are the things we have because there will be a balance sheet from different countries around especially let's say US. Them the major areas where market is traded, there will be a balance sheet on them. Many companies will be balancing their sheet. So, for example, if you come to Forest Factory, you see that there will be FOMC statement. Bank of Canada will make their own statement and their monetary policy report. There will be FOMC, that is Federal Open Market Committee of the United States. They will make their own statement. Bank of Japan, that's on Thursday, will make their own statement. Then the Euro, the Eurozone will make their own statement. The European Central Bank will also make their own conference, have their own conference. So you see a lot of statements telling you what they have achieved. The same way I'm giving you the statement of what we have achieved on our own. That's also some big company give you statement of what you achieved on their own. So if you're a trader, you need to know, you need to make sure you have your monthly statement at all time. What you have achieved, you check your monthly trading volume and stuff like that, and how far you are performing. Then it will help you make a decision. So what happened on that is that once the month is ending, any end of the month, there's obviously balancing of shit from different financial institutions, and that could cause the market to retrace a bit. I don't know if you are getting my point. It could cause the market to retrace, but after that, the market will continue if the economy is still very strong, because investors make decisions using those analysis. Is that all right? So let me know if you have a question. I'll be happy to answer your questions, and if there's anything I will help you to analyze on our other market, I will also help you to analyze them. Is that all right? Yeah, yeah, yeah. Let me know about your question. I'll be able to answer you. So okay, so let me sell a product to you that you may like to buy. So you can be able to maximize all this opportunity we are giving you by trading for yourself or joining our a very profitable trading firm that could help you make that will help you to become a better trader. You know what I mean? I'm actually expecting like a response from you guys. Although the meeting is recorded, we're gonna put it on. We're gonna keep it. We're gonna keep it on our channel here. People can watch it over and over again. So, but I'm actually expecting a question from you guys. If you guys who are connected with me here are traders, so you should be able to ask me a question, then I'll be able to answer you. So, those of you that keep losing your capital in trading, there's a solution for you. You can be able to back your asset classes with physical gold to avoid losing your capital. Then one of the company can use to hedge is GFT Ava, and then what you can have your account on MT5, but you can split some of them on gold. This is how much gold has gained this year. This is almost 50% profit return on gold. I'm not sure some of you are able to achieve that because of your strategies. So you can hedge your asset classes with physical gold, and that will prevent you from losing your entire capital. So it's very simple. So, and this is how institutional company does. That's why they are always in the market. Where you just come in and lose money and go off. There are a lot of benefits in hedging with gold. It can safeguard your investment against market volatility. Then you can also make profit on the both side, make money whether the market go up or down, and you have the flexibility of your strategy because you know you trade other market as well, but you are hedging a portion of your account with physical gold, which makes it difficult for you to have loss. It's also good for institutional grade hedging strategy. So you are becoming so you now as a retail trader, you now play along as if you're also an institutional trader. Somebody chat me up, say you want to put $100,000 in trading. All this money can be, it can apply the strategy into, for him, he want to put that money as a retail trader, but he can also apply institutional trading strategy into the same money. You know what I mean? So any money can be used as an institutional strategy, then it can make money because big companies does not really lose money like that. So this technology can allow you hedge your asset like with gold. It can do automated and hybrid trading, which means hybrid means it can switch your account from manual. Let's say we are busy, you're going to work, you're flying out, you can connect your account to automated platform and also make executions. Then, of course, the physical gold hedging. Now, access to hedge with underlying asset classes. Then it can also, the fee is also relatively low, up to 5% low. Then, of course, give you access to diversified FFF SC authorized. So these are the things you need to do, and you can use MT5. As you can see, we are this company now. You can connect your MT5. Let's say you have an account up to $5,000. Instead of putting all of them on a particular instrument, you can hedge 50% of them, or 20%, or 10%, as much as possible with physical gold, which prevents you from losing all your capital on higher market volatility. Rather, you make profit on the both side. So if you want to join the company, you can check the link on description here. You should be able to join it. So you can even join and just invest in gold. Have your gold, just invest in gold instead of trading. You can put your money on gold. Gold has performed much better than treasury bill. It has performed much better than mutual fund. Yeah, it can also perform much better than some real estate company. I can tell you, no real estate company has delivered 50% this year. There may be somewhere, but they're not really popular. They have delivered 50% this year. But gold has not done that. And the good thing is that we told you guys at the beginning when it was low that gold price is going to get to 3,900 and it's going to go to 5,000. Now it has gotten to 4,000. So the next movement is 5,000, because we work with, we were able to have some information from some research analysts who research strongly on gold and give a lot of reason uncertainty on US stocks and the US government policies. Gold was only suitable asset for investment apart from real estate. So these are the things that you as a trader need to know. You need to be able to make research, understand where people want to invest money at a particular time, and then create an investment product or create a strategy that can help you tap into those opportunities. Don't just go for something that's too popular. That popular one may not even be the one that can give you money. Money is made in secret. That's what I used to tell people. Where you don't even expect it, that's where you make the money. What the one that's popular may not be the real one. Yeah. So this product is available, and we also have. I'm trying to open. Then it can also. I'm not supposed to talk about it. So this is a company. Also, you can also just open an account here. Then you be able to connect your account with the gold trading, and you make your profit. You make your profit. Imagine having $10,000 hedging on gold. It has gone 50%. That's 50,000. That's $5,000. Yeah, it's as simple as that. So you can hedge your account with gold and make your profit. Those of you that want to learn from us, this is our website. You want to learn, we offer. You can check our website, ucheparagontrading.school.com. You can tradingschool.com. We have a trading school where we educate people on how to trade. So you see our website. Let me show you too. You can be able to check our website, join our trading school, and learn from it. Some of you don't like to learn anything because it's not now that it started. Even when we're in school, we you know how some of us behave. We don't like to learn anything, so it's not a new thing. But we all want to make money. So you see the courses we offer. We offer courses on real estate, equity investing, wealth management, cybersecurity and data analysis, crude oil and future and spot trading. We offer courses on gold trading and futures, derivative and spot. You see why we talk about gold hedging, because we offer courses on spot market, gold spot, showing you how you can invest on gold. So these are the courses we offer. How you can invest on gold spot instead of not just gold futures or derivative. So you can invest on these three types of gold investment. You can invest gold on as a future or derivative. You can also invest on gold as a spot. The crude oil is also possible to invest on future, derivative, and spot. But currently, we don't really have spot market access on the crude oil. So we are focusing more on crude oil futures and derivative, which is very common. Which is derivative is the one you guys call forex on MT5 platform. So in case you're listening to me and you don't know what is derivative, it's one that everybody call forex. Yeah, then we have general courses, another one. So you can easily book us on any one of them. I'll be able to teach you. Currently, we offer 5% discount, 30% discount on any of our courses. Yeah, so these are the area you can contact us. And we have also talked about our Telegram channel, where you can be able to hit our Telegram channel and learn from us how to do the business. Yeah. So I'm gonna let you guys go now and continue with other work. If you have a question, drop it on the comment section here. I'll be able to see it. You want to join us, or you can chat us up directly. I'll be able to see it, and I will contact you. For those of you that are trading with us, so we have already given you update for today. During the New York session, we're gonna give you update on the New York session. For those of you trading with us, we are giving you update for today. So during the New York session, we're gonna give you update on the New York sessions, and we're also gonna give you market outlook for the week, trying to let you know what the market of the week look like. We're gonna do that tomorrow, and we're also gonna give you more courses on automated trading and how you can be able to participate. I'm sure you guys are making profit, yeah, because a lot of you when we talk, when we connect on Zoom, you explain to me how you be performing, yeah. So that is all for now. I wish you guys all the best and do have a lovely day, lovely evening, or a lovely morning. Now, based on where you're connected from, do have a lovely time. Yeah.